Good morning. This is the weekend update for Buy Sell Short for Saturday, December 15th. And we're starting off with the Dow 15-minute chart. And you can see over the last couple of days, we've been in this shallow downtrend move. We've fallen into this bullish falling wedge. We did close under the 200-day moving average in this time frame and are a little bit oversold, as you can see from RSI and stochastics. But, you know, we still have the fiscal cliff nonsense overhang, and with Christmas fast approaching, if we don't get any sort of movement towards a possible deal early next week, we could really see a lot of money flood for the doors just to be safe going into year end, and that coupled with increased tax selling could make for an ugly little period in the market. Now, this time every year, we are always mindful of tax selling in stocks, so keep that in mind. So even though we have an eye towards tax selling, we're also going to be looking to pick up stocks that appear set for a rebound in early January. Hopefully, we're able to get resolution on the fiscal cliff so that we can start picking up decent-sized positions in some swing plays. But until then, I'm going to be trying to hold off as long as possible in building big positions, but getting those lists ready so that we can get ready to pounce. Looking at the daily chart, we closed right at the 50-day moving average, but we closed below that uptrend support line that's been in place from the mid-November bottom. RSI's ticked down a little bit. We do have pretty decent support. We've got the 20-day about 50 points below, and then that key area to watch is the 13K level where the 200-day moving average is at. Stochastics have broken down under 80, but not a surprise given, we were up almost 900 points over the course of 3 or 4 weeks. If we don't get a deal early this week, we could possibly see a move back down to that 12,800, 12,700 level, so keep that in mind. A stock to really keep an eye on based on that would be, of course, Apple, which continues to get taken to the woodshed. Modified chart here, another head and shoulder setup here on Apple. You recall back in the summer, we noted the head and shoulders formation that had formed in Apple when it was up there around 650, and the stock is down 20% since then. Another head and shoulders breakdown would be 500. A break of 500, I think, will bring big time selling into the stock. And, you could see the stock trade anywhere from 425 to 475 if that 500 level breaks, which could make for an interesting play into January, especially if there is a fiscal cliff deal. But everyone is running for the hills on Apple, and that's kind of having an impact on the overall markets. I know a lot of people, analysts, have been coming out trying to defend the stock, saying, well, all this is retail sellers. Well, you know what? This run from here to here, this was retail sellers too. So, you can't have your cake and not eat it. So, or is that whatever way that saying goes? Looking at the Russell, continued its slow little bleed here. Again, small caps tend to bear the brunt of the tax selling. And like I mentioned in the last video, this past week and early this next week typically sees a peak in tax loss selling in small caps. So you start to see a lot of those stocks try to rebound, especially if we get a Santa rally. The fiscal cliff nonsense is kind of holding off the possibilities of a Santa rally right now. But if we were to get some movement towards a deal this upcoming week, you would see this market rocket higher. Now, an interesting chart to take a look at here is the SMH. We don't really talk about this as much anymore since the rebalance earlier in the year, but we've got a W formation here on the SMH, and that tends to be bullish. It's retreating a little bit here, but I would think it would hold the 32 level if this formation is actually in play, and a target would be new highs into January on the SMH, and that bodes well for tech stocks. Now keep in mind, early January we have the Consumer Electronics Show in Vegas, and that tends to give technology stocks a nice little boost end of December and into the middle of January. So keep that in mind, especially given this chart we're looking at. Anyway, let's jump into some stock plays. NVTL, Novotel, Very nice breakout for us over the last 2 days. Strong close on Friday. Got to that 150 level. Should see continuation on this one next week. 50-day moving average is 154, and then we could be looking at a full retrace back up to that 160, 170 area. RSI up through 50. Strong volume over the last 2 days, and stochastics and unbalanced volume look great for a continuation move on this one into this week. CRME, we jumped into this one. We missed the early week move on news that they were able to pay off their $50 million debt to Merck with only $20 million in cash. So they're debt-free with $35 million in cash, 20-odd million market cap now, so it's trading under cash. But the big news here, and the reason we rebought into it on Friday, was news that the CEO picked up 1.75 million shares at 41 cents. Big chunk of money, $800K. Even for a large cap stock and not a penny stock, that is a significant CEO buy. And as I've always said, when CEOs and insiders are buying their stocks and buying them big, especially on penny stocks under $1, pay attention. Strong close on this one. The big breakout is the 200-day moving average at 51 cents. And this one could see a gap fill up to 80 cents to $1 into January. This is a very, very strong move on what appears to be a very undervalued stock with big insider buying. This could be a very, very nice upside play move this week, especially on a break of 51 cents. ZBB, zib, still coiling and trying to make that breakout move at 34 cents. The 200-day moving average at 40 cents is calling. Support right now is 28 cents. So let's see how this one acts this week. Scon, as we mentioned, was a big winner, but we left a lot on the table when they came out with that financing. But like I mentioned, this just means we get to play this stock all over again. I would be watching for a tax loss seller attack on this one. If it does come 30 cents and under, would be looking to pick up shares for a move into January, but keep a very close eye on this one. Actually held up pretty decently on Friday, so let's see how it acts on Monday, and maybe it might be time to nibble back into a position on this one. RRN, another January play. Biotech stock is looking like it's trying to put in a rounded bottom here. Target is a move to 40 and 45 cents into January. So it's been holding up pretty well over the last couple of days. It's trying to do a little bit of a rounded bottom. And what we'll probably see on this one into January is a move like this. We're just all the way back up to the 40s. So we've got some very nice setup plays going into this week. I have not sent out the January popper list yet. Working on it, but, you know, the fiscal cliff stuff, you know, it may end up being that we're going to wait for that January popper list until the last week of December. So still plenty of time. We've got some very nice setup plays. We're going to be looking for sell-off opportunities, and, you know, these are the kind of charts that we're going to be looking for January pop plays. Stocks down big over the last month or so, looking for a base and then a solid rebound into January. That is typically what we look for every year. So that's it for the video. If you've got any questions, shoot me an email, feedback@buysellshort.com, and I will see you guys in the chat room on Monday. Have a great weekend. Bye.